Hey, credit heroes. Changing careers can be scary, but it can also change your life. And that's been the case for today's guest. I'm excited to be joined today by John Williams. He's the founder of Great Credit Fast. And after a successful decade in real estate, John shifted his focus, and now he runs a very successful credit repair business. And he's here today to share his stories and his secrets to success, so you better stick around. My name is Daniel Rosen, and welcome to Credit Repair Business Secrets. Our most successful credit heroes, the ones who make a great living and make a massive impact, they really care about helping people and changing lives. With a knack for investing and a passion for empowering others, John's journey from real estate to social media influencer to credit repair specialist is really inspiring. And now his business, Great Credit Fast, is pushing the boundaries of technology and credit repair. So please welcome to the podcast, John Williams. Hey, John.
Hey, thank you so much for having me. Huge fan, Daniel.
I'm a huge fan of yours. I've been watching you you're on every channel.
Thanks
I just
so much.
watched a video you posted an hour ago on Twitter. You're all over YouTube with hundreds of thousands of followers. It's amazing. How long have you been doing these videos?
About 2.5 years, or almost 3 now.
Wow. Well, you're really, really good at it, and your following is enormous. But I want to know everything. But let's start with some of your videos. You're in LA, some you're in Florida. Where are you right now?
Right now, I'm just north of Miami. I'm in Florida.
Oh, nice, nice. What's the homeless situation like around Miami?
It's not bad at all. It's a little bit different in terms of just, Florida is it's run a little bit differently than, like California.
Mm-hmm.
I love California, I really do. But the last couple of years have definitely been a little different. And so I think a lot of people have kind of left and some people are coming back, but it's just a state that's going through a lot of change.
Got it. And then when you were out here in LA, is that when you were doing real estate?
Yes, I was a real estate agent in Beverly Hills from 2009 to 2019.
And then what happened that led you to stop being a real estate agent?
So it was a really interesting transition. Around 2018, 2019, I started seeing a trend where a lot of the attention was going on social media. And at that time, I was wondering to myself, are we going to see a lot of disruption with real estate agent commissions? Are we going to see a lot of data being shared online to where real estate agents are going to eventually be paid less? Not immediately, but maybe over the next decade, 15 years. And if so, what is a trend that I can capitalize on? And that was Instagram. And during that period, 2015, 16, 17, 18, I was saving up a lot of money. We were living in a little studio apartment in Westwood, you know where that is, next to UCLA. Saving up money and then bought a property next to USC. It was like a little student housing project. And we tore down a back unit and built a duplex. And I documented the whole thing on Instagram and built an Instagram following from it. And yeah, ever since then, I've just been sharing a lot of kind of what I'm doing, businesses, everything on YouTube and Instagram. I kind of segued the following from Instagram to YouTube.
Very, very cool. Yeah, I notice your videos are about all kinds of things. They're about like money, finance, banking, housing, as well as credit, and lots of stuff about the housing crisis and the Federal Reserve and change of interest rates. It's just a sampling of what I watched today.
Yeah, I mean, I was in Tokyo 3 weeks ago, and then after Tokyo, I went to LA, and now we're here, and me and my team might go to China in the next couple weeks, and we're kind of bouncing all around to kind of get a wide sense of what's happening in the world and kind of learn a lot and share what I'm learning online.
So what got you into credit repair?
So around 2020 and 2021, I was looking out in the world and I was saying, what is one change that I think is going to happen? And then I thought at that time that we're going to see interest rates start to go up eventually to a level in which is going to be unsustainable for a lot of people. And at that time, credit scores didn't really matter so much. If you had bad credit, you can go get a really good loan still. I thought that was going to change. I was talking to my wife, and we were figuring out, okay, well, what business would be a business that would really capitalize on this trend? It would be credit repair. And so we ended up buying your course, and we ended up learning a lot in your course, and we ended up, spending a lot of time going through CRC, hiring people, kind of like building it out, a lot of trial and error. I kind of jumped into this thinking that, at least for me, that we'd be able to do this with a couple people. It turns out to offer a great service, you really need a pretty decent sized team to where customer service is immaculate. Ended up being, something where it kind of naturally grew. It really kind of took us like 6 months to a year to really kind of build out the team the way it should be. And now we're about 2.5 years in.
How big a team do you have now?
About 18, including SEO as well. So we have people that are doing customer service, calls, people inside doing disputing. Yeah, it's turned into a pretty decent sized team.
How many clients do you have?
It depends. Like every month kind of changes. We add about 200 to 300 a month. So right now it's about 1,100.
Wow. Congratulations. That's amazing. Especially
Thanks so much.
The credit repair has been what, 2 years, 3 years?
A little over 2 years.
That's really, really incredible. Wow. And are you driving at all from these videos, all from social media?
I kind of have a mixed bag. So initially I talked a lot about real estate, and I have a lot of mortgage lenders that used to follow me. So a lot of mortgage lenders send their clients to us that, unfortunately don't qualify for mortgage. They'll send them to us. So we're getting a lot of mortgage lenders that are coming to us. We also have, people on YouTube that are in industries, in the automotive industry, and some people in debt relief, and these businesses that drive us traffic as well. And then we have people inside of the credit repair space as well that, end up essentially outsourcing their business to us. So they're getting, a monthly residual by sending traffic to us. And then we have a lot of just organic traffic that comes from YouTube. And then we have a little bit that's coming from SEO. SEO is kind of a hard shell to kind of crack. It's kind of every month we're getting more and more traffic, with keywords and blogs and things like that. But it's just been, kind of a mixed bag, but primarily YouTube.
And are you doing paid ads as well?
No. I mean, we probably spent collectively like $300 to $500 on paid ads. Like we've spent basically nothing on paid ads.
I'm so fascinated by your videos. The one you dropped about an hour ago on Twitter, you said that credit card interest fees are jumping to as high as 39.99%. Is that really true?
President Biden was trying to pass something called, it was a protection, essentially bringing down late fees from $32 to $38 all the way down to $8. Now, a lot of people thought that this was amazing and this is going to be a great thing. I was a little bit hesitant thinking about this because if you look at a lot of states, you're seeing default and delinquency rates double digits right now. And so why would credit card companies lend money to a consumer that has very little incentive to pay back? An $8, late payment fee is like a coffee nowadays, in a lot of cities, right? So people are going to prioritize feeding themselves or feeding their credit card company. That late fee is going to become less important. And now what's happening is credit card companies, they're increasing their interest rates because they're looking to offset, this potential incoming change. Now, this got blocked by a judge on Friday. And so now what's happening is they're kind of going back and forth on this little battle. But at the same time, we're seeing Synchrony Bank, they're moving to increase their specific credit card interest rates on the 15th. And then you're seeing a lot of, store credit cards going from 30% or 29.77% to 35%. And if you miss a late payment, it's going to 39.99%. And there's no usury. So basically, credit card companies can charge any interest rate that they want. And so now it's basically turned into this situation where they pretended like this was a great thing for Main Street, but at the end, Wall Street wins.
Bank error that caused my credit to get messed up, that caused me to eventually create software for credit repair. The issue that happened, the bank, when I told the bank about their error, they said, "Oh, sorry, we'll fix it." But it had already caused this whole domino effect on all my other cards. This was quite some time ago. This was close to 20 years ago. But at that point, it sent up these red flags, and all my cards were maxed out. But I thought that was fine. I was fine on my payments, but I was between gigs. All my cards, suddenly when the red flags went up, they jumped the interest rates. And then suddenly I couldn't pay my bills. So this tells me that's going to happen to a lot of people. That's all coming, isn't it?
Yeah. And so in my video, what I was saying is that a lot of people right now, it's very shocking. At the end of Q4 last year, the average credit card balance in America was $6,500. Right now, it's about $7,900. So it's gradually but surely increased every single month. And so what we're going to see, I believe, is a situation where a lot of people are going to start defaulting on their bills. And so if people right now have 50, 60, 70, 80% utilization and they can't pay down their cards, the best thing for someone to do is make sure their credit score is 750 and above, and possibly start looking at a balance transfer opportunity where you can transfer that high interest credit card debt to a 0% intro APR card for 12 to 24 months and just, buckle down on your costs monthly and just try to pay down as much as you can to try to get out of debt to reduce your utilization. Because when they start cracking down, people are going to crack down on the most of the people they think are high risk.
Wow. What other big challenges are coming that people need to know about?
I believe that interest rates are going to stay much higher for longer. I said this on my channel, a little while ago, and like in December, that there's not going to be any rate cuts in 2024. And some people would say, "Oh, it's crazy. That's not going to happen." Well, we're in May. They didn't cut in March. They didn't cut in April, and they're most likely not going to cut the rest of the year. Is now the conversation being had. I think that we're going to see rates stay where they are all throughout 2024, and we could possibly see a 25 basis point hike coming. So Barry Starlight, the founder of Starwood Capital, he's saying that he believes that they're going to see a bank failure at least 2 a week, but possibly every single day going forward because of all the debt with commercial real estate. And so as interest rates stay higher, what ultimately happens is it erodes the value of the equity in these commercial properties and regional banks are holding 70% of that debt. So it's a problem that regionals are going to face.
Yeah, I think you're right. Now, let's see. I want to get back to how you started your business. So you had already built a following from
Yes.
The rebuild you did at your house, or what was the project?
So at that time, it was a triplex. So there was 2 units in the front, a little house in the back. And so we demolished the house in the back and we built 2 units and we rented it to students at USC.
And you videoed that whole thing and you shared it online and you built up a following from that. It was really popular. And then how did you start to, and then you saw things were not going to be looking favorable for real estate agents and you decided on credit repair. But how did you start to build that business? It's hard to get a new business going completely from scratch. So what were the steps? What did that look like?
Yeah, so at that time, I was kind of naive to what the cost would be for me to, build out a solid team where I didn't have to answer the phones and I didn't have to do the actual manual day to day. And we just had the right people inside of the right place, just like any business. Jeff Bezos isn't out there delivering packages. So at that time, I was naive to what the cost would be and ended up being a lot more expensive. But as we kind of built out the systems, things started to flow a little bit more smoothly. So in the beginning, it was me talking about it on social media. It was, me reaching out to mortgage lenders that we've done business with, even me going on social media and doing video messages to mortgage lenders. So like I'll literally do a face message, and I'll say, "Hey, Mike, my name's John. I own a credit repair company," and I'll just go through a pitch to try to get them as an affiliate. And then if they come on as my affiliate, then they'll receive monthly residual income, and I'll try to find a way in which I can help them either be going on the podcast or doing some type of collaboration, but trying to find ways in which we can have a mutually beneficial relationship. And so that was kind of my focus the first, I would call it 3 months, just getting a flow of business coming in.
Very, very cool. And what were some of the biggest obstacles you faced when starting this business? And how'd you overcome them?
I think it was getting results in the beginning. I think a lot of people have this belief that they can just send out a letter and that they're just going to be able to get miracles out of it. And if they don't have the right plan and strategy, they're not going to get referrals from that client. And then also the second thing is managing expectations. I have a lot of people that will call us like, "Oh, I was with XYZ firm or this company and I've been with them 2 months and they haven't gotten anything." I'm like, in most cases, it's going to take 30 to possibly 45 days to get a response back from the bureau. So it's the mistake of that firm for not properly educating the client. And if you don't properly educate the client, then the client's not going to have the right expectations for you to manage. They're going to talk bad about you. They're not going to be happy. They're never going to refer you. And it's just going to be a problem. So that's, I think, the number one key is having a really, really good plan for the client, properly managing those expectations, and building out a system at the end to get a referral. If you're not building it out properly, then you're never going to have a real scalable business that's going to grow.
How does the system at the end to get a referral, how does that work?
It depends on the client. So it also where that client comes from. So if it's directly from like a mortgage lender, we'll try to work with them a little bit differently than, let's say, it comes directly from online. The ideal situation for us, though, is that we give the client a great result, and then they end up coming on as an affiliate, and then they can refer business. We generally give them, between $45 to $59.50 a month as a reoccurring. So if someone came to us and let's say they were with us for 3 or 4 months, if they could refer us 1 or 2 clients, and they essentially, potentially get their credit repair for free. So that's kind of what we're aiming for.
Well, that's very, very cool. Just amazing. And let's see, you've been doing the content for a little over 2 years. What's the secret to creating a big online following like you've got?
I think the main secret a lot of people, I think, struggle with is being consistent, like actually going out there and putting out videos. I have people that are close to me and saying, I want to do a YouTube channel. And I'll say, put out 100 videos. And if you can put out 100 videos and the only people that are watching it is your mother and your uncle and your brother, and you're still feeling strong about it after 100 videos, you're going to do well. But if you put out 100 videos and you get 5 videos in and you think that, this isn't for you, it probably isn't, right? So it does take a lot of time, and it's a lot more work than people anticipate. Like, you need to have a really, really good intro. I heard Mr. Beast talk about this. The first 30 seconds of your video, if you're getting a high drop off, usually, 20% or more, the video is not going to do well. YouTube's not going to pump it. If you can get less than 20% drop off and you have actual, content where people watch a significant duration of the video, and you have a click through rate, above, 7 or 8% for YouTube, then they're going to share the video. People are going to click on the video. People are going to watch the video. You give them a reason to subscribe. They get some value from that video. Then the video is going to do well. And so it's just kind of hitting all those check boxes and staying consistent and putting out videos that will actually make someone's life better.
Well, you're definitely doing that. I see you're hitting all the points. Your intros are really good. They hook me and get me to watch. The thumbnails are amazing. You're just hitting it out of the park. Plus, it seems like you're making an awful lot of videos each week. How often are you putting out a new video?
A typical month, we put out between 50 and 60 videos a month. So about 2 a day.
Wow.
Yeah.
Wow.
And so
that's pretty much your full-time job now, is making videos.
About 3 hours a day. So I have an editor that edits the intro, and then another editor that edits the mid-roll, like from basically after the intro all the way to the outro. And then we have 2 people that do thumbnails. So, I'll basically send in a chat. Okay, this is going to be the topic. And then I'll tell them the topic. They'll be working on the thumbnails. I'll go film the video, which might take me about an hour to film it. I'll upload it to a Google Drive. Editors edit everything. They'll send me the trailer for the intro. I'll approve it. They upload it to YouTube, schedule it. It's done. So we just do that twice a day. So it's not that time consuming, but it looks like it because, you're putting 2 a day out.
All of you watching and listening, you got to check out John's videos. They are really, really amazing. For somebody wanting to get into making content, what is your strategy? How does it work to come up with these ideas and put them into motion?
So I scroll a lot, and I have other people like on my team that will scroll, and they'll try to find topics that are getting a lot of engagement, that are relatable to the audience that I have, and that are of interest to me that I'd want to actually research. And so if they're getting a lot of engagement already, they're interesting to me, and I think it's a topic that'll perform very, very well, which it's shown to have performed well, then I'll think of how the first 30 seconds of that intro will be and what that concept will look like. I'll find a lot of articles online about how all this connects, and I'll try to I want to make sure that every article that I bring forward is something that, is highly reputable to where nobody can poke holes in what I'm saying.
What are some tricks you can do in a video to get more engagement?
Have a really good topic and give people a reason to hit the like button. The more people that hit the like button, the more YouTube will share that video. And so if you're not great at getting people to hit the like button, then YouTube doesn't know if people like it or don't like it. If you don't give people a reason to talk about it in the comments below, if people watch, for example, this is the main reason that I went from Instagram mainly on YouTube, is that social media is relationship building, right? If you're on Instagram and the average watch time is between 3 and 6 seconds, what kind of relationship can you really build with someone? Very limited. However, on YouTube, the average watch time is about 50% of the video, between 40 to 55% of the video. And the average video is about 10 minutes long. So you think about it. If someone's going to watch you for 4 minutes or 5 minutes on YouTube compared to 3 seconds, how much more valuable is that viewer?
Oh, that's amazing. I didn't even know clicking like would help you. I noticed on your videos, you're asking people to click like. That never occurred to me. I ask people to subscribe.
No, so I rarely ask people to subscribe because my belief anyway is that if you tell people, they'll put a little subscribe emoji, like my editor will do that, or a little GIF. But what I do is I ask people to hit the like button, because if you ask someone to hit the like button, it's less of a commitment. And the people that want to subscribe generally will subscribe. People that will hit the like button, they're like, oh, hit the like button if you want to, and then you give people a reason.
Very, very cool. Well, those of you watching, if you're finding value in this, click the like button right now.
And hit the like button.
Yeah, hit the like button. Come on, do it. Well, what's a common misconception people have about credit repair that you wish you could correct?
Expectations. I think a lot of people now are under the belief, I think with TikTok and Instagram, that instant results, instant gratification. Credit repair is just not that. Anyone that is promising to get you quick results is most likely, misleading you. And people that promise, if you pay up front, first, that's illegal. And second, you should run away. So just make sure that the expectations are properly set. Whether you're someone that wants to fix your own credit or you are, running your own credit repair business, if you set the right expectation up front, believe it or not, you're more than likely not going to lose that client, and that client's going to stay with you longer and likely refer you down the road. But if you don't set that expectation properly on the first call, I think that's going to be one of the biggest problems and biggest misconceptions for you and your client in that business.
I love that. What's your advice for anybody listening or watching who wants to start their own credit repair business?
I think that with the power of social media, and I think that with the power of good relationships and good people around you, sky's the limit. If you look at some of the biggest credit repair companies right now, I mean, think of the biggest names. We're all thinking of the same people, right? Same entities. If you look at what they're doing on social media, it's very basic, very like 1980s, 1990s, early 2000s, with people that have a really, really dire desire to go out there and just help a lot of people and do something really, really big. You can go create content for free. Like, I still film all of my videos on YouTube with this cell phone. Like, every single video, even though I have, a podcast studio right over here with great cameras and all that, I still film everything with my cell phone. Anyone can just bring out their phone, they can film videos, they can help people, and then they can bring people around inside of their circle that have experience that can make sure that the client gets a great desired outcome. And I think it's going to be a business that's going to be extremely scalable this year, next year, following few years. So I think it's a great industry to get into.
A lot of the insurance companies are pulling out of California. They don't want to even insure people anymore. And the ones that are staying, I've noticed they're sending spies around to look at your house and to look at things that might be wrong, like a roof.
Yep.
And they're trying to do whatever they can to knock people off their policies.
And they're flying drones around. They're looking at like people's roofs from that way. I own a condo in Florida, and I got something on my door saying that, we basically owe this lump sum of money. It was almost $20,000, that's a lot of money. And they said, oh yeah, because of what's happening with insurance in Florida, we have to pave the parking lots. We have to repaint, restucco certain areas of the building. We have to do the roof. It came out to a $2 million budget. They said, based on per unit pricing, you can either pay us, that number was like 18,000 something up front, or you can pay, it was like almost $400 a month for 5 years. I paid the money up front because if I end up selling it, that number is going to add to my HOA and it's going to decrease the likelihood of a buyer being able to afford it. So I ended up paying it up front. I thought it was pretty crazy. Then I saw something on TikTok where a woman said that she got hit with a similar thing. This just came out like 2 days ago. A $22,000 bill, and her HOA increased 3 times. 3 times. So a 300% increase in our HOA. I talked to my buddy in Miami Beach. He owns a condo. And I said, has your HOA went up? He's like, yeah, 40% in the last 2 years. I'm like, this is crazy. We're hearing about it in Florida, hearing about it in California, in Texas. It's like, how, I don't see how insurance is going to be going down anytime soon. I think it's just going to keep going up. And so people that own homes outright with no mortgage are going to be able to self-insure. And I think it's going to be a situation that a lot of people are going to look at and say, you know what? My insurance is $2,000 a month or $1,000 a month. They're saying that they believe Florida's insurance as an average is going to be $11,800 a year, Daniel.
Wow.
As an average, $1,000 a month. It was on Fox News yesterday. And I'm like, that's nuts. I Googled, what was it in 2023? They said it was $8,700 a year is what they said. And then the year before that, it was about $6,000. And then in 2019, it was $1,900. So I'm like, at this rate, we're going to $15,000 a year insurance. It's like, I think people are just going to say, how can I pay this home off as quickly as possible? And if something happens, I'll have to pay for it myself. I think we're going to see a lot of people trying to pay their properties off to avoid insurance.
Is that what you mean by self-insure?
Yeah, self-insure means that you
just take care of it.
That you're responsible. Yeah, you're on the hook for it. So if you live in, let's just say, maybe you live in Santa Monica, hypothetically, or you live in Westwood or some area like that. If you're like, a tsunami is probably not going to hit my property. You're like, okay, maybe you don't need specific insurance. Or if you live in a hillside area, like maybe I just want earthquake insurance, but I don't need all these other policies. Or maybe I'm just it's an older home. If it falls down, I'll rebuild it later. I think people are going to start looking at insurance as like do I need to have it versus like, I must have it.
Awesome. Okay, I want to switch gears now, and I'm going to ask you a few rapid questions and answer with the very first thing that pops into your head, okay?
Mm-hmm.
What's your business superpower?
Relationships and social media.
What's your business kryptonite, the area you've had to work the hardest to improve?
I would say managing client expectations. And that took us like 90 to 120 days in the beginning. The expectations, I think, and that's why I've laid into this several times so far, is that if you say, it might be 3 to 4 or 5 months, if you get 3 months, 4 months, 5 months, and that's where you get results, or if you don't hit that certain threshold, you're going to have an upset client. So I think that was a learning lesson early on.
What does business ownership mean to you?
Freedom. And with, for example, this business, you could be anywhere in the world. So like you and I, we just went to Tokyo, you went and I went, and being able to travel and having your phone or being able to go out there and kind of build out a team, your team doesn't need a 10,000 square foot office or even a 1,000 foot office. They could be remote all throughout America or anywhere in the world. So I think that's a real superpower that credit repair offers.
What drives and motivates you?
I would say that when you look at what's really going on in the world, record high inflation, sky high cost of living, the motivation is that, remember 5 years ago, 10 years ago, Daniel, people would say, I want to go to college. I want to make $100,000 a year. And that's going to be, the success. I'm going to really hit it big. And everyone's going to say, I remember that guy. He was so ambitious. Or that girl, look, he made it. Now $100,000, you can't buy a home in America. It's sad, but it's true.
Sure.
With today's interest rates, $100,000 a year, making $8,000 a month, you're not able to buy a $450,000 home on that type of income. And that's the average home in America. And so the drive and motivation is based on where the world's actually going. I believe the cost of living is going to continue to go up. And so with it, our goals need to massively, massively increase with it to offset the rising costs and the change in the world. So I think that's the main motivator, is scaling, helping more people, and pushing the limits.
I love it. What's your definition of success?
A strong family that you can really provide the best opportunity to. So and the family doesn't mean just blood family, but like everyone that's around you, like your unit, really taking care of everyone that is trying to help you become the most successful you can be, reciprocating that. If you can help them become more successful, you can put them in a better position to realize their potential, then I think everyone's just going to become, better off from it.
Awesome. If you could go back in time and tell yourself one piece of advice, what would it be?
Create content sooner.
Do you have any other advice for someone just starting out with a credit repair business?
Yeah, if you're just starting out with credit repair, I would look at things a little bit differently. So what I would try to refrain from is taking on a lot of upfront cost, meaning where you want to do everything yourself. It might sound like that's going to save you the most money, but if you're spending time doing tasks that are valued at $5, $10, $15, $20 an hour, it's going to be very, very hard for you to actually focus on working and growing the business versus working in the business. If you're working in the business, it's going to be hard for the business to grow. So thinking really about scale, the faster you can grow, the better. If you have 5 clients, 10 clients, 20 clients, I personally, and you don't have a way in which you're going to be able to 10x or 20x that business, like in the next 6 months or a year, I would find a way to try to do that. And if not, I would try to find something, find another way. Because if you're holding on to 5 or 10 or 15 or 20 clients and they're paying you $99 or $200, whatever it is a month, you're not going to be able to afford to hire somebody to really help you grow. So, yeah.
That's awesome. So we got to wrap up, but I want to tell everybody again how they can find your videos. That's YouTube, Instagram. This is John Williams, correct?
That's it.
And
This is John Williams.
This is John Williams, and your site is greatcreditfast.com. Yeah. And John, this has been amazing getting to know you and hearing your story. I learned a ton. Thank you so much for your time today. I really appreciate you.
Great connecting with you, Daniel.
Hey, and for everyone out there, if you're finding value in the things we share on this podcast, be sure to click below to subscribe and follow. Also, give us a 5-star review or share the show and help us to change more lives. If you have a question or a comment, drop it down below because I read each and every one of them. I would love to hear from you, and I'll respond as soon as I can. And if you want to hear another amazing story, check out my interview with Israel Cordova on how he built a 7-figure credit repair business from nothing. And if you'd like to improve your credit score and learn how to earn extra income repairing credit for others, check out our brand new Start Repairing Credit Challenge. Doors are closing soon, and it is completely free. So sign up right now at startrepairingcredit.com and keep changing lives.